Hello, good morning. You've tuned into CNBC and you're watching Power Breakfast with me, Vinny Motiwala. Along with me is Mamakshi Dore as well. Mamakshi, a very good morning to you as well. But yesterday also a muted day of trade, right? Last couple of trading sessions, nothing exciting. Given the geopolitical tensions, that's still continuing. And today also we're expecting a bit of a muted day.
Well, absolutely. Many grey skies, gloomy mood, but a red-looking screen. The bulls will be hoping, fingers crossed, that, there could be some bit of recovery. But let's see how today's session pans. Let's get started with the top headlines.
Absolutely. Starting with the top headlines and coming in from the U.S. The U.S. Federal Reserve holds interest rates steady by policy, but the policymaker expects 2 more rate cuts in 2025 and forecasts that the inflation will rise about 3% in the coming year. President Trump renews calls for an interest rate cut, criticizing the Fed chair Jerome Powell, while Powell notes in his statement that the recent uptick in inflation expectation could be due to tariffs.
Wall Street ends mixed. Dow closes modestly lower, S&P 500 flat, and the Nasdaq edges up as Fed holds rates steady but forecasts higher inflation and low growth. Dollar slips while Treasury yields hold steady.
Asian markets start the day with tepid moves following the Wall Street moves as investors assess Fed's decision and Iran-Israel conflict that is going on. GIFT Nifty is indicating a lower start for the Indian market.
Oil prices edge up on the possible supply disruptions from the Iran-Israel conflict and potential direct U.S. involvement. Gold too inches higher.
Israel-Iran conflict rages with ongoing aerial strikes. Iran warns U.S. of irreparable consequences if it launches strikes, even as President Trump claims Iran in defenseless, while Israel media reports that the latest Iranian attack was intercepted by the U.S. air defense system. On that note, let's look at what the Asian markets are doing given the West Asia tensions that we're seeing coming in. Asian markets too today have opened up in the red. Nothing exciting happening there. Taiwan index down 1%. We're seeing Hang Seng that's down 0.8% as well. And Nikkei, that was managing to outperform today. That's down 0.8% as well. So overall, we're seeing red across the screen for Asian markets. Nifty implied open. That is also suggesting a 40-point decline as of now for the Indian market. So red is what we're expecting on the screen, even for the Indian markets, Mamakshi.
Well, Vinny, let's also recap what happened in the U.S. markets then. Wall Street ended Wednesday's trading session mixed but near the flat line after Fed's interest rate decision. The Dow slipped almost 44 points while the S&P 500 ended flat. The Nasdaq ended 25 points higher.
And, the Federal Reserve kept the interest rate steady amid expectations of higher inflation and lower economic growth ahead and still pointed to a 2 reduction later this year. We have CNBC's Steve Leisman, who's joining in with us with a report on this.
No change in the Federal Reserve funds rate, staying at a net level of 4.25% to 4.5%. Some really interesting stuff in the forecast. Let me tell you about the assessment of the economy first. They're saying the economy continues to expand at a solid pace. Unemployment remains low. Inflation is somewhat elevated. And they talk about the idea that swings in net exports, all that front running, is affecting the data. Now, the Fed forecasts increase the inflation outlook. They reduce growth for 2025. This is a second step in a row that the Fed has taken toward a more stagflationary forecast of higher inflation and lower growth. The forecast shows risks are to the upside for inflation and to the downside for growth. Let me give you some numbers here. 2025 GDP, now 1.4%. Down from 1.7, which was down from 2.1. So pretty much a very similar drop. Core PCE, 3.1 from 2.8. This is for 2025, from 2.5. So 2 big step ups in the outlook for core PCE this year. Risks on core weighted to the upside. Unemployment, 4.5, had been 4.4 before that. 4.3, so steadily stepping up on the unemployment outlook. Now, the question you've really wondered about, which is, what did they do with the outlook for rates? Still 3.9% for this year. 7 officials did not want a rate cut at all. That's up from 4 in the prior outlook, but it remained the same because some other folks came down a little bit. 2026, the conversation Brian and I were having just before at 1 o'clock, they did eliminate one rate cut down to 3.6 from, up to 3.6 from 3.4. And then again, that remains in place for 2027, 3.4 from 3.1. Inflation is seen declining in 2026. That's important. We passed through it, but not as much as previously forecast. Growth recovers in 2026, but again, less than previously forecast. The Fed says uncertainty remains high about all of its forecasts. The Fed said in the statement that uncertainty has diminished, but remains elevated. But if you look at the measures of uncertainty, which we talked about at 1 o'clock with Brian, those all remain elevated.
Well, thank you so much for that, Steve. But let's in fact listen into what Fed Chair Jerome Powell had to say on the policy decision and also on the impact of tariffs on the economy.
In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices, and ultimately on keeping longer-term inflation expectations well anchored. Since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April, after the March meeting, that substantially higher tariffs were likely. And then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time. And what you see is an accumulation of individual assessments. Uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that. They do. So, and that's actually a line from the Teal book, which you can see in 5 years.
And U.S. President Donald Trump once again targeted the Fed chair and amused about appointing himself as the Federal Reserve Chief, calling Jerome Powell stupid for cutting rates. Listen in.
So we have a stupid person, frankly, at the Fed. He probably won't cut today. Europe had 10 cuts, and we had none. And I guess he's a political guy. I don't know. He's a political guy who's not a smart person. It's hundreds of billions, it's even trillions of dollars that we're going to lose because of this too late. I call him Too Late Powell because he's always too late. I mean, if you look at him, every time I did this, I was right 100%. He was wrong. Maybe I should go to the Fed. Am I allowed to appoint myself, Doug? I don't know. Am I allowed to appoint myself at the Fed? I do a much better job than these people.
Well, let's also get in some opinion from experts on what they make of the Fed's decision and Powell's statement.
I may not have changed my SEP. Remember, the SEP, the one that we had before was in March, and that was before the April 2nd announcement on tariffs. So it moved kind of the way you would have expected, right? Growth, right, they took down a bit. Inflation, they took up. And even though the median, and remember, these are individual forecasts, and then they compute a median after the amalgam of those forecasts, even though that didn't change, the weight sort of moved toward one cut as opposed to two. So again, we're a higher path for policy this year and next year. So all that I think is expected. The one thing I didn't expect is for them to say that uncertainty has diminished. I would have thought they would have just said it remains uncertain, not that it increased more. But so that was a little bit of a surprise. But I also think that's because the economy has been pretty resilient. I mean, the labor market is holding up well. Growth is rebounding from the the negative reading we had in the first quarter. So in that sense, there's more clarity about the strength of the economy.
And talking about West Asia, Israel and Iran conflict rages with ongoing aerial strikes. Israel's IDF says that the Air Force is conducting a series of strikes in Tehran and other areas of Iran, while Iran's Islamic Revolutionary Guard Corps are saying and said that air defense systems had been activated over Tehran. Israel's strikes have hit military sites and infrastructure in Tehran, as well as residential buildings, causing many residents to flee the city. Meanwhile, Tehran has claimed to have fired hypersonic Fatah-1 missiles at Israel in the latest round of overnight strikes.
Well, as Iran and Israel continue to trade strikes, President Donald Trump's decision on whether the U.S. would get involved looms large. We now have Dia Hypan with the latest developments. Dia?
The war of words between Washington and Tehran has intensified. Iran's supreme leader Ayatollah Khamenei has rejected President Donald Trump's call for what he described as unconditional surrender, calling the demand unacceptable and warning the U.S. of irreparable damage if it intervenes.
ملت ایران در مقابل جنگ تحمیلی محکم می‌ایسته، همچنانی که تا حالا ایستاده. در مقابل صلح تحمیلی محکم می‌ایسته. ملت ایران در مقابل تحمیل تسلیم هیچ کس نمیشه.
President Trump was quick to respond when asked about Khamenei's remarks. He said, "Good luck. They had 60 days. They made a mistake."
Say good luck.
What is the end date?
Say it.
I know the patience run out.
It's already run out. That's why we're doing what we're doing.
You just take out.
Yeah, they had 60 days and a big, 60 days, plenty of time. And they made a mistake. Honestly, they made a mistake. Their country's in ruins. So many people are dead that shouldn't be dead.
Pressed further on whether the U.S. would join Israeli strikes on Iran, the president remained non-committal, stating, "I may do it, I may not. Nobody knows what I'll do." Still, Trump claimed Tehran has quietly signaled interest in negotiations, even as both sides escalate their rhetoric in public.
You don't know that I'm going to even do it. You don't know. I may do it. I may not do it. I mean, nobody knows what I'm going to do. I can tell you this, that Iran's got a lot of trouble, and they want to negotiate. And I said, why didn't you negotiate with me before? All this death and destruction. Why didn't you negotiate? I said to the people, why didn't you negotiate with me 2 weeks ago?
Israeli Prime Minister Benjamin Netanyahu thanked U.S. President Donald Trump for his support in defending Israel's skies on Wednesday as Israel exchanged fire with Iran for a sixth day. Meanwhile, another tense exchange, this time between Trump and Vladimir Putin. Putin reportedly offered to mediate in the tensions, but Trump was quick to dismiss, saying, and I quote, "He actually offered to help mediate. I said, do me a favor, mediate your own. You can worry about this later." And moving on, President Trump is standing firm on a controversial claim that he stopped the war between India and Pakistan. This comes despite a clear denial from PM Modi following their 35-minute phone call earlier this week. That's all for today. Now back to you.
Okay, thank you so much for that, Ria. But on that note, we're going to slip into a very short break. And after the break, we'll tell you how these overnight cues are going to be impacting our Indian market. So stay tuned. Welcome back to Power Breakfast on CNBC TV 18. Now we have a team of research joining in with us to set you up for trade as well as tell you the cues in the world of F&O. Actually, what are we watching out for in terms of a trade setup today? Muted start is what we should keep an eye out on, right?
Well, absolutely. When yesterday was a day where the markets ended with some minor cuts. It was the second consecutive day of decline. And what we've observed over the last couple of sessions is that there has been some hesitation in buying at higher levels. Well, let's see whether or not that trend continues. The broader market sentiment remained under pressure. The mid-cap index bore most of the brunt with a cut of almost 0.5%. Sectoral indices too mostly ended in the red. IT, metals, realty were some of the top losers as far as the sectoral indices are concerned. But auto and banks on the flip side were the only sectoral indices which ended in the green. As far as today's trading session is concerned, a couple of economic cues that we need to watch out for is the Bank of England's interest rate decision. The US markets, of course, will be closed on account of the Juneteenth holiday, so no cues from the US markets today. As far as specific stocks are concerned, we'll be keeping an eye out on Siemens Energy. The stock will be listing today, and keep an eye out on a couple of stocks on the back of fundraise as well. The GIFT Nifty will come up for you on the screen. It does indicate a red-looking start for the Indian markets. But Mangalam, what are the cues in the F&O space indicating?
Well, very interesting cues coming in from the F&O space. And why do I say that? Because, yes, we have been in a bit of a range. Yesterday, the close was mildly lower across major indices. The IT index was the one that underperformed, even as the Nifty Bank supported it. The GIFT Nifty indicating a mildly negative start. The important part, however, that no major changes in flows coming in from both cash and futures in the FII purchase. So DIIs and FIIs, both of them purchased about 1,000 crores a piece in cash market. Futures, 44 crores was the purchase. Longs not changing much, it's just around 20%. But it's weekly options expiry today. And as you pointed out earlier, the US markets are shut today, which implies that FII volumes would be slightly thinner. And ahead of weekly options expiry, they've actually gone ahead and sold a lot of index options. What have they gone ahead and sold? They've sold 62,000 call contracts, which tells you that there could be supply at the higher levels. But more importantly, if the market holds on to higher levels, buoyed by domestic money, then these short calls will have to cover their positions. And that may lead to a big surge in the last hour of trade. That's what the data is indicating. So 24,800 call writers, fairly active. 24,900 call writers, fairly active. Combined premium tells you supply should be between 24,890 to around 24,950. If the market sustains at these levels, then there is a big up move, which is likely in the last hour of trade. That's what the data is suggesting. 25,000 call writers are active as well as 24,750 put writers. For the market to show any signs of an up move, we have to trade sustainably above the 20-day moving average on the Nifty, which is at 24,841. What leads it higher today? Is it the Nifty Bank? Will it be the IT index? Because yesterday, despite the weakness on Wall Street, the Nasdaq ended mildly in the green. Two stocks I'm watching out for. Biocon, we pointed out, may enter F&O ban, and Ireda could have exited F&O ban is something that we said, and that's exactly what has happened.
Okay, Mangalam, thank you so much for that. But on that note, we're going to slip into a very short break, and after the break, we'll get you what's happening in the world of commodities. Stay tuned in.
Welcome back. You're watching Power Breakfast on CNBC TV 18. Let's go across to my colleague Manisha Gupta, who is here with all the updates from the world of commodities. Good morning, Manisha.
Morning. Thank you for that, Mama. Well, I'll start with the crude oil prices because we are holding on to those gains that we've seen in the last couple of sessions onto this one. Interestingly, the gap between WTI and the Brent crude also seems to have narrowed down to almost $1 barrel. Markets have seen support continue from the geopolitical tensions between Israel, Iran, and the kind of statements that we see here from various countries. Apart from that, it also has to do with the U.S. crude inventories, which have posted the largest decline in 1 year. There has been a decline by 11.5 million barrels. On the other side, the U.S. gas stocks have increased way more, telling you that the markets are looking at slightly weaker demand going forward. But the street is also reacting to the U.S. Fed statements that have come in yesterday. There is no interest rate change on expected lines, but the Fed still sees 2 more rate cuts in this year, and Powell has warned of rise in prices from tariffs, and that seems to be supporting gold in some sense. We've seen some pullback coming in case for gold and silver, both of those commodities trading slightly in the positive in Asian markets.
Okay, Manisha, thank you so much for that. But with that, we're absolutely out of time with this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Don't go anywhere. Up next, your Bazaar Morning Call.